when you get rid of 280E.
You think that's the biggest catalyst?
I think 280E is the biggest catalyst for the sector. Yeah. I think it's always been that because you're basically just making these companies 30% more valuable.
This is The Dime. Dive into the cannabis and hemp industry through trends, insights, predictions, and tangents.
What's up, guys? Welcome back to another episode of The Dime. I'm Brian Fields, and with me, as always, is Kellen Finney. And this week, we've got a very special guest, Jason Spatafora, Wolf of Weed Street. Jason, thanks for taking the time. How you doing today?
I'm doing great. How are you guys?
I'm doing well. Kellen, how are you doing?
I'm doing really good. Really excited to talk to Jason. Really excited to learn about the intricacies associated with cannabis trading. How are you, Brian?
I'm doing well. Jason, we have a East Coast, West Coast battle. So for the record, your location, please.
I'm on the East Coast.
There it is, Kellen. I don't know how many straight East Coast we've had, but at a certain point, I think we've got it. So, Jason, for our listeners that aren't familiar about you, can you give a little background about yourself?
Yeah, sure. I am an Aquarius. Two children. No.
Star Wars fan?
I am a Star Wars fan. No, I mean, I started investing, okay, because there's always this misconception that I'm a trader. I started investing in 2013, was gravitating towards things that that I thought the world would need. My first investment was a desalinization company. And then I moved to distressed banks that needed to be propped up by, the EU, basically. And I just started to just kind of get my feet wet. And, I started out small and I was, it was like good returns. And one day I was at home and I heard Eric Holder, and he was talking about cannabis and how the DOJ wasn't going to go after states. And I was like, are pot stocks a thing? And so I went to, the Google machine and I typed in pot stocks and it brought me to this website called marijuanastocks.com. And there was 10 companies listed. And I was like, oh, well, this one says it's a payment processor. So I bought it, and I'd never bought a penny stock before in my life. It was 5 cents. And then 2 days later, it was 7.5 cents. And I was like, this thing's up 50%. I was like, this is amazing. And then 2 days after that, it was down 50%. So I was like, how did I just lose $150? So I started to dig into it. And the volatility kind of attracted me, right? And, I knew Colorado was going to go legal. And I was just kind of thinking, all right, there's going to be all these animal spirits. It's weed. It's a new industry. Let's see what happens. So I start doing that. And, every other week I would just add to the position. And I was doing what you probably shouldn't do, which was putting all your eggs in one basket. And I was buying this stock at 4 cents. Colorado went legal. Everything just started booming. And, from there, finding information on cannabis online was non-existent. So, with the little digging that I was doing, I'm like, man, there's so much crap out here. I need to, I don't want it blown back on me. So I created the Wolf of Weed Street Twitter account. And I would use people online. I'd be like, hey, does anybody live in Colorado Springs? And somebody would be like, yeah. I'd be like, hey, can you go see if this is a PO box or a real company? I'll send you $100 on PayPal. Right. And so I was using Twitter as boots on the ground, and then identifying companies. And then, then the market just started ripping. And I got a call from a friend, and he was like, sell all your pot stocks. Now, at this point, my $8,000 investment was $55,000. And I'm just like, this is the greatest thing in the world. And my buddy calls me. He's like, hey, I heard you were doing really well. I talked to UC. UC's our other friend. He's like, sell all your pot stocks right now. And I was like, why? He's like, these things are about to get crushed. I'm like, what are you talking about, man? I was like, he's like, they're scam companies. And I'm like, no, they're not. I'm like, mine sells lights and pipes and irrigation. And he's like, I'm looking at shorts building up. And I'm like, okay. He's like, I got a Bloomberg terminal. I was like, what's a Bloomberg terminal? So I get off the phone with him and I was like, this guy's an idiot. And while I'm on the phone with him, my account's just keeps going up. And I was like, you know what? Let me just tweet out his warning, right? So I tweet out the warning. And then I kid you not, like 30 minutes later, an article on Bloomberg came out about these things and the entire market dropped 60% into the close. So my 55 when I was on the phone with him, by the end of the conversation was like 70, to give you an idea how crazy it was. And at close, it was 29. And I was just like, oh my God, what happened? I was like, so much money, and I was getting ready to get married in like 2 months. And I was like, well, you did tweet the warning, right? So now, because I've been looking at these things so hard, I had a pretty good idea of, what would bounce. And then I just kind of started calling it out. And then from there, these things just got hyperinflated. And then I would look for comparable companies that nobody had ever heard of. And, I found one that was like a half a penny. In the next 3 months, it went up 10,000%, and the moves were wild. Like 1,000% moves in like 2 weeks, a month were not unheard of. So it was like a real wild time. And then, I got married, and I was going on my honeymoon and I was just holding like a massive amount of pot stocks, like almost 7 figures worth of pot stocks, like penny stocks. And I was like, time difference is 17 hours. I'm like, I need to start getting out. I could always come back in. And while I was in Thailand or Cambodia, the market tanked, like blew up. And after that, I'm like, man, you really need to learn about, just the markets in general. Like this was a gift. In your simulation, this was an amazing gift. And then I started to go back and look, and I was like, man, this time of year in the OTC, everything drops off a cliff. And then from there, I formulated this Ides of March thesis. And, going into the next year and the year after that and the year after that, by February, March, I was 80 to 100% out. And then I'd wait for the summer. If I still liked the idea, I would get back in. And that's how I would grow my size. So to give you an idea, I did this with Aurora in 2016. I bought 20,000 shares of Aurora at like 89 cents. And then, and this was the summer of 16. And then that Constellation Brands announcement came out and the thing jumped to like 3 something. And so I sell it at $3 and I was like, oh my God. I was like, this is nuts. And I played the market the rest of the year and I was playing like natural gas and like oil ETFs. And then in the summer, Aurora's back at $1. It's actually like $1.03, like 98 cents. So I was like, let me put it back in. So I put it back in and then it goes from $1 to 10, into 2017. And then same thing. Well, take it off. The next year, it goes from 10 to 5. I don't put all of it back on because I bought some other stuff, but you kind of get the point. And that strategy has just saved me tons and tons of money, and then like little tricks, like if anything hits an all-time high in February, I sell it, which is exactly what happened with all the MSOs in 2021. Like you take out your principal, take out the profit, and then go from there. I mean, my wife and I have an investing company, and we have an operating agreement, and the operating agreement spells out in black and white, like when we sell and when we redeploy. And it's like a year and a day. If you're up, you're taking your, half of the money out. And then, if you bought anything else, you're kind of paring your losses, like you'll tax loss harvest. And in 21, I said to my wife, I was like, no, don't sell it. I was like, I don't want to sell these. I'm like, and to give you an idea, it was like Curaleaf was like $12.50, Cresco was like 10, Terracin was like 7 or 8. And I was like, don't do it. I was like, I don't want you to do it. And she's like, I was like, let's talk about it, at the end of the day. Well, she already put the order in. I had no idea. And I'm like, where's all this pressure coming from? And I'm like buying in my account. Meanwhile, my wife was selling into me, and I always tell her, like, I'm like, you're the best cannabis investor in the world because you just don't care. You're just like, am I profitable? Yes. All right. Well, I'm going to take that. Am I going to redeploy? Because, there were times where we were like, all right, let's, redeploy. And then, it kind of became clear that, we didn't really want to just keep trading these things. So, the only way that we would redeploy was by using the spread, meaning, when she sold Curaleaf at $12.50, and then all of a sudden Curaleaf's $7, right? Well, what's the difference from the amount of shares she sold, that $5.50 difference? And then, okay, well, what's half of that? Okay, well, we'll use half of that and buy at $7. And then, just to kind of keep ourselves protected, but have a zero cost basis on our positions, which had a zero cost basis anyway, because we took the principal out. I think I was the top tick on Curaleaf at like 1838 in February. But yeah, that's kind of my story. I've just kind of seen it all. Invested in a lot of companies early in Canada, helped raise some money. And that was just super speculative. And I think we were all kind of a little wet behind the ears, but just kind of keeping to that, like, manage risk, take profit. We were able to not get killed. Right. So yeah, I think that's kind of me in a nutshell.
So kind of expanding on that, obviously early on in cannabis, some of the companies might have been different, right? So we've seen the origin of some of these MSOs. So take us through those early days. Did you get to see kind of the birth of the Curaleaf when it went from a smaller company or a Trulieve or a GTI to kind of a bigger company is today?
Yeah, so I invested in Harvest before it went public. I think I did Curaleaf also. I'm not sure. And the reason I say I'm not sure is because we, myself and a couple other people had a group and we just kind of put money in and then see what happens. We definitely saw, I remember when Trulieve was coming out because I'm in Florida. So I was very well aware of them. I was a little bit familiar with Green Thumb, Curaleaf. I just remember kind of when they came out, when they went public, it was just kind of like everything was just starting to melt down. And that was like the same with Harvest and Acreage. Acreage, they were doing their go public at like $20 and they told me I couldn't do it. So, which, I have to thank that person, whoever that soul is, because I would have been down 75% by the time, I could have sold. But yeah, when I was doing the Canadian things, and after I exited in like the rest of my position in like March of 2019, I was still so up. And, if I use kind of like the model that I use now, I would have bought all of these things in the summer because I still kind of like the story. But because of where because I took off like 80% right before C45 was implemented, which was October 18th. I even made a calendar when I'd be selling. I put it on Twitter. And I was so up, like I could buy like 5 times my position in some of these things. And I had to ask a quant to give me like, I need data. Like, is this worth getting back into? And that was the summer. And I was like, there's no way I can, come into this. And I was waiting for the US companies to show like consecutive growth before I decided to put any money back into it. But, like Trulieve, next time you talk to Kim, ask her the story about True Light. Right. So, I got in to Trulieve at like 8 and, and I was telling some friends, I was like, this company is, it's in Florida, it's everywhere. I think that they're killing it. And my friend was like, and he was like a serious trader. He's like, what's the symbol? I'm like, TRUL. Okay. And, so I was like, put it out there. And I was talking about, I was like, hey, Trulieve, and I like tweeted about Trulieve, right? Now I'm careful about my tweets. I'm not like, if I buy something, I'm not like selling it. Like, you always give it time. I was like, guys, take a look at this company, TrueLeave, and I put the symbol, but I put the symbol for True Light, which I didn't know was like some crappy like penny stock. It was like a penny. This thing short squeezed, and my friend calls me. He's like, dude, thank you. So what did you do? I'm like, what are you talking about? He's like, I'm up like 500%. And so I had to go back on Twitter. And I'm like, no, it's trul.c. I go, if you have to call your broker, if you're in the United States, and get a broker assist to buy it. So anyway, that thing starts running up. So people start selling their True Light, which are up like hundreds of %, and they just dump it into TrueLeave. But the crazy thing about True Light is it kept going for like, it went up like 2,000%, 3,000, something ridiculous, So that's like the how like Kim and I got acquainted. It's a really funny story. But yeah, I mean, look, it was always the main differences between Canada and the US, right? And really it came down to population, amount of dispensaries, and, just kind of the makeup of the people, right? So pretty quickly, and I didn't even really think of this when I was investing in Canada, was like, okay, well, what are they producing? And then what are they able to sell? And when I saw like a graph of what they were able to sell and then what they were having to turn into oil, it was really scary. You kind of look back and you're like, how did I make any money in this sector? Because it really was just hype and momentum. And then, of course, you have government intervention that just kind of blows up the industry. And that's pretty much what happened in Canada. Now we're kind of seeing the same thing here in the United States.
How much did federal legalization, like the thought of it, affect like the early days, like it does now? Same kind of excitement, letdown, or was it less so?
Yeah, it was definitely, the excitement was always there, right? I remember when GW Pharma got to like a phase 3 trial with like Epidiolex. That was a big mover for the sector. Talking about legalization, it was, back then. And if you asked me back then, like I was very public, I was like, I don't want legalization. I never wanted legalization. It was more important what states were coming online, whether it was Nevada, California, Colorado, Oregon, whatever. And then the bigger states to come, because, you always had that momentum, but you always knew that momentum would fizzle out by the time like February rolled around. And people always, will keep firing money at that story, especially in the summer when these things get low. I mean, some people, they dollar cost average themselves to oblivion, but I like the system because it was like, hey, we're running up, we're going up 50%, 100%, 200, whatever it is. And then I know we're coming down 50% easy. And those have been the drawdowns. The drawdowns have been like 50, 60, 70% always. I mean, this drawdown's like brutal because of, just the dynamics at hand. Where is all the liquidity coming from? Well, it's coming from the ETF. Well, the ETF is in a very good, and I'm talking about MSOS, and I like those guys, right? I love Noah and I like Dan, but it's supposed to be an actively managed ETF. And they basically made a bunch of pipe bombs, right? Based off of, with the hopes they wouldn't go off because of, what was going on in DC. And they're buying into this rally a lot. They spent like $14 million in 3 days before we hit that top on just Green Thumb. That position's worth 7 now. And that's across the board, and the whole, when people put money into the fund, they expect us to buy. Well, they expect you to be good custodians of that capital. And then you get put into a situation where, shit, we're not getting it. What do we do? And you can only sell your big board stock so much because at some point you're going to run out. You're going to run out of your IIPRs, your GrowGen, and whatever else you have. And then you're going to have to start dipping into the Green Thumbs, the Curaleaves, the TrueLeaves. And that's kind of where we're at right now. You're going to start seeing redemptions, and it's just a massive, massive bomb, right? And just nobody, I'd say 95% of people weren't prepared. And the people that were prepared and could see it coming were just cowards and couldn't say it out loud.
I'll let that marinate real quick, because that's pretty powerful stuff you just said right there. So I guess staying with that, safe banking obviously is no longer with us. We have lost the safe banking fight, unfortunately. But the question now is, are cannabis stocks dead? Right? We've seen the numbers just disasters, but are they left for dead? And is there hope that there's another catalyst in the future?
If you go through my Twitter feed in like 2020, I think maybe there's like one mention of safe banking, right? We've got to get away from this idea that safe banking is the end all be all of the cannabis industry, because I can tell you I've been making a lot of money in this space, and it's never had safe banking, right? So, the first thing we need to do, if we want a healthy environment, is people have to be better stewards with their capital. They can't dollar cost average all the way up and then all the way down, and then think like, well, at some point, I'm a 5-10 year investor. Well, I remember a lot of dollar cost averaging that happened in Canada too. And those people got destroyed. These are not, one, you dollar cost average Microsoft, Apple, Amazon. Those companies are going to be around. You do not dollar cost average pot stocks. And I don't care how much how legit the company is, there can always be something that comes out to, affect it in an adverse way. You never know. Who knows? Like in 5 years, the United States could turn into the Handmaid's Tale. And what are you going to do now? Right? Obviously we have bigger problems at that point, but you see my point. So are cannabis stocks dead? Yeah, they're dead. They're dead for a while, and part of the reason they're dead, besides safe banking, is, we're on the cusp of like real serious risk in the overall market. Whereas, I had that thread that I put up on like the weekend before we hit that high. And I was like, look, it looks like safe banking is going to happen, but it's still going to get faded, right? You are still going to get faded from here because of everything that's going on. And there's not going to be a deviation from, the pot stocks, even if you had safe, okay, because there still has to be custody to get worked out. There's no language in safe banking for custody. So we were going to come down anyway. Now, do I think we would have come down this fast? No. My target was like $8, right? And that's if we got safe. Now, I think that the target's probably, 5 or under.
On MSOS?
On MSOS. That's probably the easiest gauge, right? And look, I think if you're coming into this industry cold, yeah, look, I was looking today and I was like, Verano's $2.80. And I'm like, oh, look, Green Thumb's back where I bought it, at $8. Curaleaf is, $4. True Leaves, set under $7. I was like, this is crazy.
Crazy.
But, I start thinking about it and I'm like, I'm not buying shit. It's the opportunity cost, right? So where do I want, do I want to sit? Why would I buy them right now when I still know that there's still, all this risk in the market, right? If the SPY goes to like 330, 300, as some analysts think, like real analysts, not these Cantor, Fitzgerald, Cowan, like idiots, that now all of a sudden when they say anything good, we listen to them. Not these morons, but like Mike Wilson from Morgan Stanley, like Mike Kantrowitz, like these guys have been on the money. And where do you think if we hit 870, all right, on MSOS in October, right, when the market hit 850 and there was still hope for safe, what happens when you take that hope away and then let the market tank. It's a real different picture, right? And then it's like, at some point, people are going to wave the white flag and try and par their losses by buying growth, which I think, and that's what happened during COVID. And people would say, oh, well, my average on Curaleaf is $3. I'm like, good for you. I bought, I was buying Boeing at $90. It doubled in a week. How long did you have to wait? I was buying Square at 40. It went to 200, Lululemon, like on and on and on, because people are going to pile into growth. And that's really where the generational opportunity is to make money, because COVID was like that. But, COVID was an anomaly. And 2018 was like that when we had that little bear market. And the thing that's interesting about COVID and, the conditions for pot stock were perfect. They will never be that perfect again. You had all of these people, kids, getting money from the government, opening up E-Trades, Robinhoods, TD accounts. And what are they going to buy? I mean, weed is like the biggest meme stock out there, And it's like, if you weren't on Robinhood, then you're like, oh, I can buy Curaleaf, I can buy TrueLeaf, I can buy all this stuff. And there was just all of this QE happening that was just jacking up the market. And the market, stocks want to go up, right? If the conditions are there. And all the conditions were there, but it gave you these hyperinflated valuations and these prices that were unrealistic. But, if you were averaging up on TrueLeaf at 50 and all of a sudden it's 25, you're like, it's a steal, it's 50% off. But the market doesn't function like that. And you can see that by the other stocks in the market. I mean, look at NVIDIA, look at Roku. Roku was $450. It went from 60 to 450 during COVID. It's in the 40s again, and like Shopify, so many of these companies. So we are not in like our own little bubble, like 80%, 90. I mean, Carvana, come on. Carvana was $350. Now it's like $3. And pot stock investor is just kind of oblivious to all this. And they try and say that they're not, but they're oblivious, because they wouldn't be talking about dollar cost averaging. They wouldn't be trying to draw a parallel between like MSOS and ARC or like XBI, like these idiots. They wouldn't talk about, oh, it's the algorithm, it's the algorithm. No, it's your stupidity. Like traders, because there's a part of us, or, like a portion of my account that I trade, right? And it's got a very specific reason. Like I trade, and I mainly trade options. And I trade options, I take half of the profit and I put it into long-term stocks. That way I don't need to grow my account with my money. I use it from my trades. And that's just a good way to manage risk, right? Like we would see Dan, and I've tweeted some of these like screenshots. So like, oh, Dan's buying. All right, yeah, let's buy these puts. Let's buy these puts. Like this is all artificial buying. So like in September, when MJUS was buying, Dan was buying right alongside of them and inflating, the sector, right? Inflating the sector. Well, when somebody that knows what they're doing sees that, they're like, this is going to come down so hard. And so what happened? We went from like 1381 to 870 in like 2 weeks. And everybody was short. You dump your risk, got short, and then it's like, okay, well, now I can buy everything half off. Buy it back, you have zero risk. And then you do it again and again and again. And, like that's been the best setup, is just watching like foolishness in the market and taking advantage of it. Right.
So to quickly push back on you, isn't time in the market for someone, let's say, who's a more novice, let's say they put 10% of their investable assets in cannabis stocks and they look at TrueLeaf and they go, Florida is still medical only. Soon there'll be adult use. Georgia's going to come online. Pennsylvania's going to come online. Maryland's going to come online. And if I can get it in at $7, it probably has an opportunity to grow over the next 5 to 10 years. Isn't it a worthwhile position still to hold if you have it in a sizable portion of a diversified portfolio?
Yeah. Yeah. If you're coming in cold like today, yeah, I think that, one, you have to create a budget. How much do you want? Okay. So if you're saying, all right, I want to buy 1,000 shares, right? So that's how I approach any investment, any trade, any option, whatever. I look at it and I'm like, if I had to hold this, how much? And I could only buy it once. How much would I buy? I'm like, okay, I'll buy 1,000 shares, right? Of True Leaf, right? I mean, not me, but some novice.
But maybe you.
Right. No, I wouldn't buy 1,000 shares. But I come in and I'm like, all right, so I don't know what the closing price was. Let's say, just say $7. Okay, that's $7,000. That's my budget. You know what? I'm going to buy 2,500 right now because there's still some risk and it could go lower. And I'm going to wait, right? I want to see what the market does and I'm going to tier in. All right. That's a lot different than dollar cost averaging, right? Because you're going in there with a plan. Dollar cost averaging, people, the way that they talk about it, no, you're just averaging down, right? Which that means you had no plan, you had no stop loss. And let's say, when you do get into this position and then all of a sudden you're at your full position and it's just not working for you, your stop loss should be like 10, 15%. And I know a stop loss is it's like alien in the cannabis industry, but
is that a universal rule that you would apply?
Yeah, it's
that's a universal rule that I apply. Like maybe if something's at a support, then I'll give it like 15%. But like I always tell myself, because I hate being wrong, right? Especially when I trade. Everybody does. So if the thing's going against me and I'm like, this thing's probably going to go lower, I just tell myself it's not that you're wrong, it's that your timing is off. And that'll end up saving you a lot of money because you can't get into a stock. Like, look, there were people that were getting into this sector in like February 2021 when it's like peak bubble, right? And they were just like, I'm just going to add more. They're getting cheaper. But at some point you have to say, no, now I'm just losing money, And if you are going to do that way, well, maybe you should understand how to hedge your position, right? Nobody knows how to hedge their position. It's really easy. Like the greatest trade in pot stocks was to just be short MSOS in February and just get a year-long contract. I could only imagine what that thing is paying. But
they're sponsoring this podcast today.
Yeah. MSOS.
That'd be amazing.
Just teasing.
That'd be amazing.
So what's your thoughts on the business model versus the share price? Do you look at when you're making those investments, I guess you look at them differently between trades and long-term investments?
Yeah, you have to.
Are trades just all technical?
Well, no, I mean,
of course, other factors in there.
Like when you said technical, you mean like on a chart?
Yeah, like looking at more like technical like support, resistance, your MACD, your all of those kind of stuff.
Technicals have been out the window for this sector for years. They're good to know, but those technicals are going to lie to you more than they're going to tell you the truth.
Because it's going to influence you to think it's a good idea?
No, because
the market is not
something
mature. They're not blue stock. They're not like blue chip stocks that behave according to historical trends.
Right. There's not like a volume shelf that you can really look at and be like, oh, look at all this. I mean, these things don't trade a lot. Okay. So like when people are like, oh, I'm looking at the technicals, it's going to, we're going to get safe banking. We're going to rip to 25. I'm like, where do you buy your drugs? Because I'd like to get your hookup.
Invest in that company.
Yeah, I mean, look, it's all animal spirits and psychology. Like, look, you can get one headline, a chart could look great, right? And then boom. Like, did anybody think that we were we blew through every support that was created from September to 2 weeks ago? Just got blown up on high volume, right? So yeah, you should pay attention to the downside, because now that you've got all of that resistance is going to play a part. But then also you have to factor in the fatigue of the market. The guy that bought MSOS at 10 and thought that it was the bottom, right? If that thing gets to 10, he's probably going to be like, I'm just going to get out. And then you got to deal with the guy at 11 and the guy at 12 and 13 and 14.
25.
And 35.
And 50. And Nancy Mason's going to do it. 33, like that. You can't really look at like technicals, but if you're looking at like the company, like what they're doing, like what their product is, like MedMen. All right, MedMen's a great example. MedMen's an amazing brand, right? It is one of the most disgusting public companies that has ever existed in this space. Disgusting. Like if you went through that prospectus, you were like, this thing is just a share selling scheme. Okay. Now, if I go into a MedMen, I'm like, oh, this is great. Like, oh, nice. Maybe I'll get one of these like MedMen shirts. So completely different animal. And it's really hard for investors to separate the two, right? They're like, oh, look at how much Trulieve is dominating in Florida. Okay. They've been dominating in Florida forever. Has it helped their share price?
At what point does these companies generate cash? So what point is that cash flow going to actually affect the stock price? I know that's what do you think?
When you get rid of 280E.
You think that's the biggest catalyst?
I think 280E is the biggest catalyst for the sector. Yeah. I think it's always been that, because you're basically just making these companies 30% more valuable.
I talked to a banker kind of too, and he said that safe banking won't even move the needle for like a lot of the larger institutes, like your JP Morgans and your Wells Fargos. They said that it has to be rescheduled for them to like actually seriously consider it. Yeah. Is there any truth to that statement?
Yeah, that's probably true, right? They don't want to have to deal with like compliance and FinCEN and everything, and that's what kind of caused the blow up in 21, right? Because you had all these promises, safe banking. Oh, we're going to make it. The banks are going to be able to custody them. So what did the banks do? Well, the banks are like, well, I need to be compliant because I want in on that money, on those fees, on those exchange fees. So I'm going to force everybody to sell. That way I'm like, when I come to them and this is ready to go, I'm like, look, clean slate. I don't have any cannabis stocks. We are not holding any cannabis stocks. So they forced fund out, I think, Wasatch, like $300 million position. Like basically at the top, like you're welcome, Wasatch, wherever they were housing that. So then it was like JP Morgan and then Morgan Stanley and Merrill Lynch and, Bank of America, all these things trying to get compliant. And the market pulled back, and then we're going into the summer and we're on like the normal cycle, right? 30-40% pullback. June is the worst part, and then volume slowly starts creeping back up. MSOS went down, tapped 30, 35, and then we started to just like float back into the 40s. And then Schumer and Booker did their press conference, and it's funny because some of the banks were like, yes, we're working on it. And then you didn't hear from them. And then the market tanked. And then when SAFE got put into the NDAA, it was actually Morgan Stanley came out with a note, and Bank of America. Yeah, our clients are asking for cannabis stocks. We think that we'll have a solution by like January. Once it wasn't in the NDAA, again, you never heard from those people again, from those banks again. So like the custody of the stock it's massive because there's always going to be an oversupply of stock coming into the market from these companies, either through acquisition, insiders, founders, whatever, original like debt holders. And if you don't have institutional support to backstop the stock and you leave it in the hands of retail, who's notoriously dumb about trading or investing, then you get what we have right now, which is like the worst parts of the Bible in this sector.
Let's do a quick rapid fire. If you had to choose one cannabis company to hold forever, who is it?
Probably Green Thumb.
Bigger threat to the cannabis industry, big pharma or big tobacco?
Neither.
Medical operators should be allowed to convert to adult use when the markets open up.
Yes.
Which event is more disruptive to the cannabis industry, federal legalization or interstate commerce?
I mean, they're basically the same thing. Well, I'd say federal legalization, but not in a good way.
It's fair. True or false, you were involved in the game stock?
Game, like GME?
Yeah.
False.
Better investment, plant touching operators or selling shovels to the operators?
Selling shovels to the operators.
True or false, the wolf persona is actually Jason in real life, a character, or combination in both?
Combination of both.
What is one idea or fact about investing in cannabis that most wouldn't know?
That when legalization happens, most companies are going to get killed.
Why?
Then it becomes an execution story. And this is why I got out of like 80% of the Canadian companies right before C45. Then it's like brands, and then are you executing? What are you doing with your capital? At that point, then you see a lot of death in the industry. It's like, and you saw that in Canada. There were so many public companies in Canada that were like, TGOT, Aurora, Organogram, so many. Supreme Pharma, man, I don't even know, things like 2 cents or something. And once legalization happens, everybody thinks it's like, oh, this is it. We're going to be rich. Most of you are going to be poor.
When you started your journey in the cannabis space, what did you get right? And most importantly, what did you get wrong?
What I got right was playing the momentum, taking my profit, moving on to the next thing, treating the industry like a giant game of Frogger. What did I get wrong? Maybe pressing some positions a little too hard, believing too much in management, but from that, I've become a much better investor, right? Because the way that I look at it is you have to treat every single company, every single CEO as if at some point they are going to try and screw you. So you always have to be on guard. And, I know it's like, it's really easy because a lot of these CEOs and some of them I love, let me say that. Like I love Kim, like I'm ride or die for Kim. Other ones where I've had good relationships have done stuff where I'm like, that was like really messed up. Right. And, like understanding that sometimes the public persona of some of these people is not what you think. It's like never meet your heroes, right? I don't treat any of these like heroes. I don't treat them like sports teams either. At the end of the day, the only thing that matters is your ROI, right? Your return on investment. Like, can I turn $1 into 2? Or, can I turn 2 into 4? But what you also need to think about is if I put in 1, is it going to become 50? Right? Everybody likes to think about all the money we're going to be rich. We're going to buy Lambos and stuff. Let me tell you something. When you get to that point, you're so conscious about money that you're like, I'm not buying a Lambo. That's a waste of money. Like that's a depreciating asset. But I'd say, maybe putting a little too much faith that some of these companies would do the right thing. Especially early on.
Before we do predictions, we ask all of our guests, if you could sum up your experience in a main takeaway or lesson learned to pass on to the next generation, what would it be? Yeah,
for, in investing advice, I would say, you see $100 bill on the ground, you pick it up. You don't try and walk another block and say, well, maybe there's $1,000 and you just walk past that $100. If you're going to take profit, like always be conscious of like, the market is very hard. Okay. It's not, it's there to take your money. It's not there to make you money. And if you keep that front and center, you're always going to be aware of your risk, right? And when you do have a big win or you get lucky, you have to pull that capital out, so you have to have rules and you have to stick to them, And in life, I would say sometimes you're going to have to say things that are really unpopular and you'll be vilified for it sometimes. But there's always going to be somebody that listened, that took the advice, and that makes it worth it. But like, try and help people, right? Don't be like so gung-ho an idea that then all of a sudden the idea doesn't work and it's not working. And then you keep pressing that idea onto them, because then you're just like Jim Jones and you're handing out Kool-Aid to people with cyanide. We just had our Jim Jones moment in the cannabis industry, which is really sad, because I know a lot of people just got completely wiped out. And it definitely didn't have to be this way.
Well said. All right, prediction time. Jason, I've given you a magic wand to change anything you want in the cannabis industry. What aspect are you immediately changing that unlocks a cannabis rocket ship?
The ability for them to trade on a major exchange.
How quickly do we see it pop once they do that?
Well, there'll be, all the usual idiots front running it, but in this case, they're right to front run it. And then, we'll see an oversized move, and then, just a complete re-rating. Do I think that they go back to 2021 highs? They could, but down the line, I definitely think that, there's been a lot of deterioration in, the overall businesses, because just like Apple, Amazon, all these other companies, that the sector needs to come to grips with. They just think that, these things are going to moon, but actually the businesses and the earnings are getting worse. And I would expect the next 2 earnings to be pretty bad in the cannabis industry.
Kellen.
280, I think, would probably be a huge difference maker for a lot of these organizations that are struggling with growth capital and just all that kind of stuff, I think. So,
well, you know why I didn't say 280E?
Because you said it earlier.
It's too obvious.
Because I think that you get a re-rate, but then you've got nothing, and then you just get a fade. So like 280E probably, look, when these things were making tons of money, they were still going down, right? When I first bought Curaleaf, I think they were doing like 115 million a quarter. Now they're doing 300 and something a quarter, and the price is lower than where I first bought it in 2020. So
would 280E though decrease a significant amount of admin costs that these MSOS are 100%. Incurring, and maybe they could then take that cash and do some stock buybacks or something like
they won't.
They won't like 4%.
Hey, I can dream, right?
They won't do stock buybacks because it's not a good enough use of capital, because every dollar, all the cash is so important, right? And most of these guys, like Curaleaf, they need cash if they're going to do acquisitions, because who the F is going to take stock, right? And that thing's just going to keep getting bloated and more diluted, and it's just not going to move at some point. So yeah, cash is just too valuable. But if you get uplist and then you get 280E, then you get you don't get
gas. We're talking about gas, right?
You get 100%, real quick.
I mean, that's the fantasy we can all hope for, right? That's the formula that we need to unlock. I don't know how we can get DC to get that to happen, because that seems like unlock. My biggest concern is that when these big MSOs that are vertically integrated in multiple states have to get rid of some of these assets because they don't need to be vertical in all these states, and people start specializing, I'm petrified to see what that does to their business, because I can't imagine that they're going to have just willing takers to take these different aspects across different states.
Yeah, you're kind of seeing something like that with the REITs. But on the flip side, it's like, hey, we can't pay rent anymore. Guess what? This is your property now. And they're like, well, shit, I don't want this. And they're doing all these lease backs.
So they sold it to you.
Yeah. You're going to see a lot of these greenhouses get converted to strawberry farms, and they're going to be growing lettuce in them, or potted mums.
Tomatoes are back, baby.
Yeah, there's always village farms.
So Jason, for our listeners, they want to get in touch, they want to learn more, where can they find you?
Obviously they can find me on Twitter at Wolf of Weed Street, or they can find me in True Trading Group. It's one of the head mods, and also one of the owners of basically it's courses, and we actually teach you how to trade and manage risk in the market.
That's great. Yeah, we'll link those all up in the show notes. So anyone interested in learning and helping themselves do better can definitely take advantage. Thanks for taking the time, Jason.
Thanks, guys.
Guys, if you've enjoyed this podcast over the last few years, can you please take 3 minutes or less and leave us a quick review on Apple or Spotify? All reviews make a massive difference for us and help other people like you find this podcast. From the bottom of our hearts, thank you.
Thanks for listening to today's show. To check out more great cannabis podcasts, go to podconnects.com. Here's a preview of one of our other shows.
I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast, The Talking Hedge, and newest member on PodConX. So come on over and check out The Talking Hedge. We talk about business news, interviews, investments, events, all that stuff. So come nerd out with me over at The Talking Hedge. You can find me at thetalkinghedgepodcast.com or on all your favorite podcast platforms. Don't forget to like, share, and subscribe, or don't. And I'm out.